Let's head over to Chicago, find out what's going on the trading floor today. We have Scott Gecas standing by. And Scott, thanks for joining us here as we take a look at our market action today. Lots of jitters in the market, apparently. What do you hear among your colleagues there behind you?
Yeah, everyone that we've been talking to, just pretty much across the board, is focusing on all the Middle East tensions. The news story that came out last night about the bombing in Iran. So, I mean, that's definitely taking center stage across all markets. It really doesn't matter what market you're looking at. It's definitely affecting everything. So, but what we're looking at in what really sparks my interest in all the grain markets in particular is we've had a pretty strong uptrend for quite some time. Now, with the funds still being net short in soybeans as well as in corn, the open interest is starting to decline, which means that is a factor of short covering. So with the funds being net short pretty much across the board with all the grains, we're watching for that short covering to come into an effect. You know, I don't really, obviously today, that's not going to be a big difference because we're seeing a lot of pressure pretty much in all the grains right now. The biggest factor that I am looking at, though, is even when you have this down market, the calls are still holding a premium versus the puts. So that's really unique when you're seeing a lot of downside pressure. The puts are slightly active, but not nearly as much as the calls are. So the calls are still holding a stiff premium, especially in the beans. The beans right now are holding about a $4 premium to the calls. That's really expensive, especially when you see in a downdraft like today. So what we're going to be focusing on is that report coming out later in the month with the expected numbers for corn to be a little bit of lower production, a little bit lower stocks. So we're going to wait and see how that number really is going to come out. But just in general today, everyone's focusing on just the Middle East tensions and the headline risk so far this year going forward. It seems to be the trend is going to be headline risk continuing. So we have to wait and see how that's going to play out.
You know, I'm glad you brought that up. I have heard quite a few people talking about that they figure USDA will probably almost have to revise their production number on the corn just because there's so much of it out there in the field yet. And by the time the report comes out, I mean, it's still going to be standing there. It's a big unknown if they're going to be able to salvage all that or not. Now, let's take a look at these futures here. You mentioned the weakness going on in the corn and soybeans. On the corn right now, we're trading roughly about 3.5 cents lower at 3.88 on that March contract. And the soybeans, we're hanging on to double-digit losses. We have January down 13.25, while the March is currently down 15.5 at 9.40 3/4. That is about 16 cents off our overnight high. All right, let's look at the wheat. And in the wheat market in Chicago, we have it down 6.5 cents on the March at 5.53 3/4. Kansas City has kind of taken the brunt of the selling on the wheat complex today. March down 10.5 at 4.74 3/4. And the Minneapolis March wheat down 9 3/4 at 5.48.5. We'll come back and talk more with Scott Gecas about our livestock trade for one thing when we return after this. We're talking with Scott Gecas of the Fox Group in Chicago, and he rejoins us right now as we look at our livestock trade. This is kind of interesting here, Scott. I just checked the wire, and we have some cash cattle trade today that has developed, but it has developed at prices that were pretty close to what the asking prices were. I'm hearing that we have some 124 sales over a large part of the plains today. That would be roughly $2 higher than what we had last week. And you said you had heard rumblings that maybe it might even be bumped upward from that even a little bit?
Yeah, a little bit of trade around 125 in Iowa or so. But, I mean, that's the biggest thing that we're going to be focusing on as far as the cattle market goes, is that cash trade. With the futures trading a little bit of a stiff premium to over cash, we're definitely focusing on that. We have a long net position in the cattle market with the funds being net long. So with the funds being net long, they're going to be subject to that short covering or that long liquidation. I'm sorry. So if we see a break in the cash, we expect that liquidation to come in pretty heavy and pretty sharp and pretty fast. So we're going to have to wait and see with that. But that's what we're going to be focusing on, is that cash cattle trade.
All right, now looking at our futures on the live cattle board in Chicago there, right behind you, we currently have the live cattle on February trading 95 lower. It's at 124.83, and April is down half a dollar at 125.97. That seems to be counterintuitive here, Scott, where you have the cash trade kind of surprising folks turning out $2 higher than a week ago, and then the futures take a nosedive after that.
Yeah, and that's just one of the reasons for that. I mean, we're watching that 125 level. That 125 level, once we broke it, we've seen a little bit of a downside pressure, a little bit of uptick in volume. So that's what we're going to keep focusing on. If we can close anywhere near that 125 or even above it, we expect that longer term uptrend to continue. But if we do get that break in cash, roughly, I would say 122, 121, you're going to see a heavy liquidation pattern showing up.
On the feeder cattle trade today, let's look at the board there. And on the feeders, we have January down $1.13 at 143.53, March down 82. On the lean hog trade, we've been touching limit down at times today, and now we bounced off of it a little bit. We have February down 267. We're at 68.88. April currently down 275 at 75.25. Real quickly here, Scott, hog trade, is that tied to that tension in the Middle East?
Yeah, I think so. But like I said, I've been talking about the option skew and it favoring the downside puts versus the upside calls. So all the fundamentals are completely up to the upside. There's strong demand for U.S. pork, just worldwide. China's imports were the highest ever for the year, but we're still having that downside premium on the put side. And as of today, I mean, the market is definitely right.
Oh, okay. Well, thanks for pointing that out. I appreciate that. Scott Gecas of the Fox Group in Chicago joining us right now to analyze the markets.
Okay.